Hello everybody, welcome back to the second video of the week. In this video, I'm going to give you a list of 5 to 6 coins that I think are going to do extremely well in the month of June and talk about a piece of news that will be potentially impacting the crypto markets, as well as give you the exact game plan on how you can use that piece of news to make some money. With all of these coins, I'm going to be talking about the entry, exits, and why I think those entries and exits are good. And I'm going to give you a little bit of an update on Bitcoin so that you know that the plan is still intact. So without any further ado, let's just start with the quick update on Bitcoin. Now, Bitcoin is doing exactly what I said it would do in the last video. For those of you who haven't watched the last video, I break down exactly why I think Bitcoin is going to 35k, as well as give you all the potential entries and exits. So if you want to figure that out, I highly suggest watching the previous video. We'll link that in the description box below. But for now, you have already gotten a clear breaker structure above here with a candle body close. Now, you are already retesting the order block. In fact, you are very close to the 0.5. Personally, I think that anywhere within here is already good enough for an entry. So again, everything is still going according to plan. We have not hit invalidation yet. And even if it hits invalidation, so what? We have risk management. So the Bitcoin plan is still intact. So now let's move on to that news event that I was saying was going to impact the crypto markets. So Hong Kong is about to let retail investors start trading crypto on June 1st. I know, big surprise. You would have thought that Hong Kong, the financial center of Asia, would have already let retail investors start trading, but in fact, they have not. So the Hong Kong Securities and Futures Commission has finalized rules allowing retail trading of crypto starting from June 1st, which is right now at the time that I'm recording this video. There is a catch though, because only licensed exchanges in Hong Kong can do this. All the other exchanges that are not licensed in Hong Kong, it will literally be illegal or treated as a criminal activity if they continue to promote and advertise their services in Hong Kong. So this is good and bad at the same time. Personally, I think that this is a net positive for the crypto world because, let's face it, regulation is coming for everything. The only way you're going to be able to avoid regulation is to move off of decentralized exchanges. But with regulation comes a lot of volume, especially considering the fact that Hong Kong is Asia's financial center. This is a net positive for crypto. Next, we move on to the news event that is potentially going to shake up the crypto market. And after I talk to you about the news event, I'm going to give you one coin that I think will benefit from this piece of news, and it could be a good narrative coin focus on over the next few days. All right, now that you understand what's going on with the Hong Kong situation, let's talk about this narrative coin that I promised you, and that is going to be CFX. Now, this is a coin that has ties to an Asian narrative. Whenever there is an Asian sort of good narrative or a bad narrative, CFX tends to be a coin that you can watch out for. And for now, we do have a setup that we can use. Firstly, the structure of CFX has been trending towards the upside, where you've been making new highs and new lows. Now, this is good. Now, this, I know that it has just dumped, but this actually just looks like a retracement. Let me explain to you why. This block over here, this blue block, this is known as a mitigation block, or some people would like to say that there is a fair value gap over here. By the way, this is a bullish sort of scenario, and it presents to us a trade opportunity where our risk is minimal or quite a large reward. Now, let us talk about this buy side liquidity here. Now, this is basically a lot of retail stop losses or even institutional stop losses that are placed above this level. Basically, when this level gets hit, there are going to be a lot of people that are going to be stopped out, or they will enter the market because they think that this is resistance and they should short. Now, the only thing that matters about this level is that the market makers, who are the ones who move the market, they have this information, and market makers are in this game just to make money. Well, duh, right? Everyone is trying to make money. Here's the thing about trading. It is a zero-sum market where in order to win, somebody else needs to lose. So if the market makers want to make a lot of money, how do they do that? Well, they stop as many people out as possible. And this is the way to do that, right? That is the draw on liquidity. You can see that the stop loss is just right here, over here, below these candle body lows. Now, why candle body lows? Essentially, I want you to think of a daily candle, right? This is a daily candle. Now, let's imagine that if you look at a 15-minute chart, it's going to look like this, right? You're not very good at drawing. You can see that majority of the volume is concentrated in the body, and the wick is very easily manipulated by anyone who has any decent sum of money at all. So as much as possible, especially when we're looking at a higher time frame, we want to use the candle bodies and not the wicks, because that is where the smart money volume is concentrated at. Basically, if the smart money thinks that this market is going up, we'll protect their positions here because they have their stop losses set here as well. And when we trade alongside the smart money, if we are right in the sense that the market makers want the market to go up, then this will not get hit. And if it does get hit, then we were wrong. And well, so were the market makers. That is the reason for the stop loss. And basically, this is a trade that will give you about 7-to-1 risk to reward ratio, where basically if you risk $100, you would make 700 back on this trade. So that is a very good risk to reward ratio. And this is a very good calculated risk. There is only one risk that you need to look for, which is the fact that CFX, for all intents and purposes is a shitcoin. And besides that, like there is a 1-day fair value gap over here that has not been filled right here. So this blue box. Now, what I have done is I've drew a fib from, height low, load high, whatever, and got the mean threshold. This is the 0.5. Now, the 0.5 tends to be a level that market makers really, really love. Now, if you want to figure out why and learn exactly the way I trade, learn about all this liquidity stuff and the smart money stuff, I'm actually going to be launching a free course over the next couple of weeks. And I know immediately what you're thinking, free course? Oh man, this guy's trying to waste my time. Because let's face it, most free courses suck absolute horse crap. They don't work. They teach you the most fundamental, the most basic of stuff that you could probably learn more from a YouTube video than you could from a free course. Now, this will be different. I will actually teach you the way I trade, and I will teach it to you in a way that you will be able to replicate as well. So if you're interested in that, make sure you sign up to the waitlist in the description box below. In order to control quality, we are not going to be letting everybody in. So the earlier you sign on to the waitlist, the better. Anyways, I'll see you inside. Back to the 0.5. This is also similar concept to the liquidity here. There is also liquidity here. So this could act as a draw on liquidity to the downside, which will invalidate this long idea. But with Hong Kong, let's just say for the next few days, right? Just for the next few days, this trade is on. In fact, let's just say that Sunday is the sort of deadline for this trade. If this trade doesn't build this, start going up before Sunday, which is the 4th of June, then this trade is invalidated. Let's just go with it on that. A long trade is going to be invalidated, and you should probably be looking at shorts down to this level instead. So that is the effects. Now let's get into the 5 coins that I think are poised to do well for the month of June. And we are going to start with Ocean. Now, Ocean is looking pretty bullish because you have gotten very, very clear breaks of structure and you're getting candle body closes above previous highs. And well, basically this just looks bullish, right? You are breaking market structure to the upside. This matters because, again, back to the market makers, we always want to trade alongside the market makers and not against them. And remember, whenever you see the markets going straight up or straight down, you know that this is market makers doing. They are the only ones who have enough money to move the markets in this kind of fashion. Retail traders like me and you, we are little fish, and there is no way this year is retail, right? That's retail. In fact, you could also say that that's market makers. They deliberately keep the price in a tight range before exploding out of it. We're not going to discuss that in this video. Let's just say that at the moment, market structure is looking bullish. I believe that the market makers are involved in this, and so we are going to try to follow the market maker trend. How do we do that? Well, let's look at this bullish order block over there. Now, bullish order blocks, the way you trade them is you simply place a long at the start of the order block, place a stop loss end of the order block, and then target for this is again untapped daily buy side liquidity. There is a lot of stop losses above this level, so this trade will give us a potential risk reward of 6-1. While this one right here, if this doesn't work out, right, if you get stopped out here, it means that you are going for a deeper retrace. What do I mean? If I draw a fib right now, this is just at the 0.5, and in fact this is above the 0.5, our entry, so this is an aggressive entry. Let's assume the trading range is from here to here. Anything above the 0.5 is known as premium, where easiest way for me to explain it to you is that if I were to sell you an iPhone right now for 3,000, you probably wouldn't buy it because it is being sold at a premium. But if I sold you an iPhone 14 Pro Max for $500, it's authentic, you're probably just gonna buy it straight up, no questions asked, because it is a discount. Same thing for the markets. You don't want, try not to buy in a premium, try to buy in a discount. So that's anything below the 0.5. And at the moment, that's going to be this block right here. This is an aggressive entry. Doesn't mean it's not going to work, but the higher probability one is going to be this block right here. So when you return back to this block, look how it lines up with the golden pocket, the Fibonacci tracement. So this is going to be, I wouldn't say the better entry, but let's just say that we have 2 entries here. And if this first one doesn't work out, then we go for the second one. In fact, the second one is going to give us even bigger risk reward of 7.31. So that is the trade that I'm going to be looking out for. Expect this trade to take at least 2 to 3 weeks to play out all the way to the target once it has been filled. Now, the reason why I'm giving you trades with a longer timeline is because it is impossible for me to make updates to these videos like every single day or even every single week. Something on the daily chart is going to be much more applicable to you guys watching this video. Now, this is going to be the second point, which is QNT. Now, reason why this looks so great is because check it out, right? All of these equal lows here has just been taken out with this move right here. Now, why does this matter? Again, liquidity exists most beneath equal lows or above equal highs. Now, the reason for this is because 90% of the trading world seems to believe that this concept of support and resistance, where if you bounce a lot from this level, which is here, then that must be support. And so if you come here, you're going to buy, and then you're going to set your stop loss like somewhere random below. And look at this move, right? You don't buy at support. You buy after support is taken. Everybody's stopped out. That's when you buy. So currently, all the liquidity here has been taken out already. Now, the next point of liquidity is going to be, somewhere around here. If you wanted to go for that, you would have went for it in this move before you break structure. Now, what do I mean by breaking structure? Check it out. This is a previous high. You've already broke it with a confirmed daily candle body close. So on the daily chart, MT is looking pretty bullish. So now we want to jump into this trend. How do we do that? Well, there are two blocks that I would personally be looking at. Number one is this block here. This is a mitigation block. And you can see that, in fact, we have already filled it. So I think day QNT is going to close even higher. What do I mean by that? See, after this daily candle body closed above this previous high here, look at the next day, trade it into the mitigation block before moving up. So this would have been the sample entry that I would have went with. Imagine that price is trading at this range low, right? Most of price is trading comes to this range low. And now we have this range high. This range low has been taken out. You simply go back to the range high. That is the simplest way that I can explain it. So for now, QNT, very bullish. The next time you break structure again, like let's say we missed this one, right? Price does not retrace back here. You can either just literally go for a market long right here, place your stop loss beneath the mitigation block below and have the same target as well. This is not going to be a very bad trade because this is going to be a 5-to-1 risk to reward ratio. But alternatively, you can also wait for this level to be broken first and then do the same thing, right? This is a mitigation block. Now, I wouldn't recommend this over waiting for a retrace, but again, this is a 6-to-1. I can't argue with that. Now, ideally, I have drawn out this block here from 107 to about 104. Now, that's the entry is going to be at 107.5. Now, that is also some sort of a mitigation block, but also a bullish order block. So if you do get a retrace back to here, that's going to be the level that I'm looking at. Either way, QNT looks very bullish, and I expect 144 to be hit in the month of June over the next 30 days, basically. Now, moving on to the third coin, it's going to be XRP. Now, the XRP court case filing seems to be coming to an end, and hence XRP is pumping absolutely mad right now. And I think we can use this opportunity and we can use this news event to get in on XRP. And similar concept to what I showed you before and this trade is going to be based on a very similar concept, similar to QNT trade I showed you, which is going to be a mitigation block / order block. Now, the entry for this is going to be at about 0.48 with a stop beneath the candle body lows here. I hope you remember why candle body lows at 0.453. Now, this is going to be the entry, and the target is going to be this 1-day buy-side liquidity here, which is this previous candle body high. Now, I know that this also looks like a bearish order block over here. But again, if price is really bullish, right, it is not going to just go for the bearish order blocks. It's going to go for previous highs. Remember, a bullish market condition, the previous highs gets broken, right? In a bearish market condition, previous lows get broken. Like you would, like, let's see here, right? This is a bullish order block and yet got completely broken through during this move. Why? Because it's going for previous lows in bearish market conditions, right? Same thing to here. So when we go into the trade with a bullish idea, we go for the previous highs. Simple as that. And that is going to be the entry that I'm going to be looking for. I don't really see any other entry other than this fair value gap here at 0.489 with a stop beneath 0.48. Now, the only other alternative entry that I can see is a entry here at 0.48, like 0.49 with a stop at about 0.486. And that is going to be taking advantage of the fair value gap. You can keep that in mind that it will be an aggressive entry, but that is all up to you. Remember to manage your risk and understand that all of these are simply my ideas and what I would personally do. Now, I have been doing this for a long time. I have managed my risk and I can take like 20 of these trades and lose 20 in a row and I'll still be fine. And I hope you will approach these markets the same way. Now, one potential risk I do want to talk about on XRP is the fact that similar to the first coin that I showed with you, which is CFX, there is an unfilled daily fair value gap over here, which could act as a draw on liquidity to take it to the downside. The way that's going to happen is I want you to visualize this. This is the range low right here, where you can see that price has been mostly trading between these two levels. So once this range high has been taken, and the reason why I didn't suggest you going into this trade after this, like for example, once this level has been taken out, this will become a rejection block, this blue block here. The reason why I didn't suggest you going long here is because that is also the range high. If the range high gets taken, the chances are you go back to the range low. And it just so happens that there is a liquidity level over here that if you do come back to the range low, you can fill in this liquidity level. So that's the reason why I didn't suggest that one. Just be aware that this trade is a calculated risk where the potential for us to win on this trade, in fact, the reward when we win on this trade is 10-1. So this is a very good risk to reward ratio, so that even if we do lose, it doesn't really matter. Just understand the risk from this trade. I'm going to switch it up a little bit and tell you about a short trade. Now this coin is LDO. Now a lot of people are actually bullish on this coin, but personally I don't see it, because for now the market structure is actually still bearish in the sense that you have lower lows and lower highs. So in this sense, I wouldn't necessarily want to start going long on a coin that still has bearish market structure. But I believe that this fair value gap here at about 1.464 should be tapped sometime, not in the next month, but probably in the next 2 months, unless there's only one case where this does not happen, which is, I want you to keep in mind this high here at 2.35. If this gets broken through with a daily candle body close, and then, well, basically that's when you flip bullish and you go in for the retrace on whatever order block, and then you ride the wave higher. But until that happens, I believe that LDO is going to go lower. And, well, basically the entry is going to be, well, you could literally just market order here because you already have a next lower high confirmed, right? In the sense that this wick is higher than the 2 wicks next to it, and so this became a swing high. It's a lower high, and so when you have a lower high, then you look for a lower low. That's the low that will be broken, and in order for it to be a lower low, I've already drawn it out right here. So this trade here is about a 6-to-1 risk to reward ratio. Well, it's pretty clear cut. Not much to talk about here, but if you again do get a candle body close above this high, then you start flipping bullish. All right, just pay attention to that. And again, just to flip. And as for the last coin, we're going to talk about Optimism coin, and I'm not feeling particularly optimistic about this one. Again, this is going to be another short idea. This just looks incredibly weak. Like, there is no reason why you should be buying Optimism just because it is quote unquote cheap, because there is no such thing in the market. Market is not a supermarket. When you go to a supermarket, you look at, let's say toilet paper, it goes on sale for like 70% off. You're probably going to buy a few, right? Even if you don't need them right now, you're going to buy a few because it is cheap and it is good value. But there is no such thing as value when you are trading. We are not trying to be Warren Buffett and invest here. We're not trying to buy value stocks. In fact, we want to buy value stocks. Crypto should not be the place where you look to do that. It should be in the stock market. The majority of crypto are shitcoins. So there's no such thing as value. And because of that, you simply look at whether this looks strong or this looks weak. And at the moment, this looks like it's going to go lower. So this is just another short opportunity where you can look out for shorting Optimism coin back to at least 1.2. This is an unfilled daily fair value gap over here, and potentially some kind of quote unquote support. Now, if we were to follow all the concepts that I talked about so far, Optimism coin will eventually go back to 0.887, but I don't think it's going to happen in one fell swoop. So for now, pay attention to 1.2, look for short opportunities back to 1.2. The only way this gets broken is if you make a new high by breaking 1.642, and at the moment you can do that, but for now this is looking weak, and I really do not recommend buying anything that is just quote unquote low in price, because anything that is low in price can go lower in price, anything high in price can go higher in price. That's why you don't short a coin that is like going straight up, right? You buy because just buy high, sell higher. Well, hopefully you have taken some notes. I have shared a lot of knowledge in this video. Feel free to rewatch this if there are some concepts that you did not understand. I have been talking a lot about my trading philosophy throughout this video, but again, if you want to learn how to do it my way, free course is coming out within the next 2 weeks, and the only way you're going to be able to apply to join is to join the waitlist in the description box below, and I will see you inside. Until then, may the gains be with you and trade safe, my friends. Bye bye.